Fellas, what a day. Today is Thursday, February 19th, 2026, and today I made 3,675 on all of my funded accounts, but one of those trades, like $1,000 of that, was on an eval for full transparency, but I did make $525 on my 5 Pathway to Payout Series accounts, which are now eligible for a payout after one more winning day, which I will farm tomorrow for like 150 bucks or whatever it is. But anyways, skipping past all of that, today was one of the most hectic days on the chart in a while. My model presented itself 5 times in the matter of like an hour and a half. It was utter insanity. There is a ton of sauce and tons of knowledge you can learn from today's price action. I'm going to cover all of that. Full transparency, this is going to be a long recap, but if you are trying to learn to trade my model, you need to watch this video. There is going to be so much sauce about my entire analysis of price action throughout the entire morning today. So stick around. It's going to be a long haul. And before I get into the recap, as you guys know, I trade the SIS system. That's what my model is called. It's the simplest inversion system in the space. If you are looking to learn my model, I teach it entirely for free in my Discord and here on my YouTube page. I have a full Confluence bootcamp, model PDF breakdown, IFEG ranking system, and so much more. I teach it in the Discord where I also live trade every single day. So if you're looking to do that, link in the description to all of these resources. But that being said, let's get right into this recap. So I'm not going to waste any time at all. So here's a 1 hour time frame, and this is what I was looking at coming in the morning. And a couple draws I noticed we had unfilled hourly gap to the upside. This is a really obvious draw that I had that I wanted to kind of play off of. And I knew we had inversed these two fair value gaps to the downside. We're kind of bearish. We're holding bearish fair value gaps, reacting off of them. So I was leaning bearish on the day. And I had another confluence that I had leaning bearish, which I'll get into in a minute. But I mean, obviously we have these lows. We have a low down here. We have a high up here. So nothing I really need to talk about just because I kind of want to let pre-market play out a little bit. So if I drop time frames now to the 15 minute, I want to focus on unfilled 1 hour too. Remember that. So at 8:30 a.m. we had news. So this was a data low down here. And this was another super important draw for the day. And I'm going to put my daily bias on screen now. So please pause the video and read that. But this data low was going to be huge. If I go to the 5 minute, it'll be a little bit more obvious. You see this data wick and this unfilled hourly, super obvious draw. And we're right in between them. So from my daily bias, you know, I want to take a play off of one of these. Just wait for one to get hit and see if we can get a reaction off of it. Or if there's a pre-market play, maybe take that. There wasn't, full transparency. But that being said, if I got an obvious trade towards one of these, I was going to take it. But otherwise, I just was going to wait for like a sweep, reaction to the other one, or tap, and then reaction to the other one. So that was all I was really looking to do today. I thought my daily bias is going to be pretty simple. So I'm just going to let a little bit of price action from pre-market play out. Get right up until market open. And I mean, we have a couple inversions here, like an inverse to the downside. But I mean, look, we're just range bound. We're right in between. I didn't really want to take anything. So here's market open candle. You'll see. Weird ass market open. We were kind of like moving sideways, moving with some violence. But what I want you guys to notice, like I said, I'm looking to take a play towards one of these draws. And right here, market open spiked, and you'll notice we swept out these highs. Pop over to ES. We didn't sweep out those highs. You see how we left that behind. So I know data lows is a good draw. Market open, we got some weirdness, but we did sweep out some highs and got an immediate, looks like got like a break of structure. We're trading towards these data lows. One thing I noticed, which I called out on stream, we had a 30-second inversion within this area of price, which you could have entered short off of, targeting the data lows. Stop loss would have had to been somewhere up there just because of the weird wicks we had, and take profit would have been the data lows. Break even would have been this wick right here. So off this inversion, you would have entered on this candle, obviously. First possible presented trade of New York open. I will let this play out, and you will see. Obviously, we wanted to dump towards data lows. Like, this was an obvious draw. We also traded lower and swept out that low I was talking about from pre-market, the hourly low. So first trade, I noticed data lows get snagged. Now, remember what I said. I wanted to see a rotation off of data lows towards the unfilled hourly if that presented itself. So first possible trade, I didn't take this. Of course, we had an SMT with this high. So we had an SMT, we had an IFEG, we had a liquidity sweep. Reason I didn't take this. Now, here's where the education starts to come in relative to my model. I want to trade out of a rejection from a higher time frame fair value gap. This would have been that rejection if we traded in this hourly. If we traded in the hourly, I would have taken a short here. Because we didn't, and I knew we had conflicting draws, I didn't want to take this. I ranked this setup B+ just because we didn't have a rejection out of a high time frame fair value gap, and we had a conflicting draw. I didn't want to take this. But it still fit as a valid inversion entry model within my system. So We'll call that a valid entry. This was one of the setups I called out on stream. Some people chose to take this, some people didn't. I personally didn't. Now, let me just go up in time frames a little bit here. You see, we took this low and we started forming some fair value gaps on the way down here, which is a good sign. And I noticed the highest time frame gap we made was this 2-minute fair value gap. So we wicked down into data lows, swept the other low, formed a 2-minute fair value gap, and I know we have an unfilled hourly above. You'll see if I go to the 3-minute, we did not form a 3-minute. So 2-minute is the highest time frame inversion of the leg. Off of this, you know, liquidity sweep, really obvious draw. No SMT, but we have an obvious gap, and we took a data liquidic pool. This is enough for me to enter a trade. This is what I was looking to go long off of, was this 2-minute inversion. So I'm looking to take a long off of this, and I got to let a few candles play out here. Now I'm going to show you there was something wrong with this trade, and you guys will notice it as I play this right now. But take a look here. See this piano that we formed? One problem I had with this trade is we did not get a V-shaped recovery off of this low, meaning we didn't just sweep the low and react. We swept the low, chopped around for 10 minutes, and then got the inversion. You know I really like this long prior to this because of obvious draws that we had and clear fair value gap that we made. Only problem being we didn't have a lot of momentum. That was the only problem I had with this trade, but I was still willing to take it. I thought it was better than the first setup. I wanted to take a long off this 2-minute fair value gap. Target was going to be the unfilled hourly, and my stop was going to be a closure below this 2-minute inversion. So just somewhere around here, I'd assumed I get stopped out. So put it here for the sake of the time being. My break-even point was going to be this high over here. This is going to be my break-even point. However, a lot of people would have used this as a take profit because it's more than a 1-to-1 risk reward. Let's check what it is. That'd be about a 1.5R. But me personally, knowing unfilled hourly gaps are a super obvious draw, and I could get 2R towards it. This was my personal first trade that I entered on the day, and I entered this on an eval, random eval. Why I entered on an eval? Because we didn't get a V-shaped recovery. It wasn't perfect. I didn't want to take it on a live account. I'll let it play out here. Immediately spiked to break even. A lot of people got out for 1.5R there. I said this hourly gap's probably going to get hit. I want to take it to the hourly gap. I let that happen. So we've taken both draws, but it's 9:54 a.m. We're in the 10 a.m. macro. We're in the 9:50 macro. Day's not over. Just because we took 2 draws, I know we still have a lot of price that wants to move throughout the session. So I'm just asking myself, what could I take for a possible continuation? When I take continuations, I look for higher time frame fair value gaps that I can take a play off of. What higher time frame fair value gaps do we have, you may ask? 5-minute. We opened up an unfilled 5-minute below. This is an obvious draw that I know we're probably going to trade back to get a continuation long off of, or trade towards after we react off of this high. So I'm looking to take either something off of this 5-minute or towards this 5-minute. Now, let me drop time frames. I'm going to go to the 1-minute time frame. Let me let a candle play out. You'll notice we open up 1-minute fair value gap. Highest time frame fair value gap in the leg is this 1 minute, obviously. And you will see, after we tap this hourly fair value gap, we slowly start to make our move down, and we inverse this 1-minute fair value gap. Now we have liquidity sweep of all these highs, invalidated the bullish SMT, and we have a 1-minute V-shape inversion off this high. So rejection on a high time frame fair value gap, liquidity sweep, 1-minute inversion, and an unfilled gap below for my take profit. I took this short. This was my live account play. This met literally every single step within my model that I could ask for towards this 5-minute. One problem it had wasn't a positive R. If you had your stop loss up here, I was going to have my stop loss somewhere around here because I thought we should just flush considering we had an unfilled gap. So stop was relatively around here. And I just was going to hold that to about EQ of the 5-minute fair value gap. It would be about the midpoint of it, so somewhere around here. But you get the gist. Took this on my live accounts, and you'll see wick lower, and we tap into EQ of the 5-minute fair value gap. Whew. Take a breath, everyone. We are moving with the most beautiful price action ever. We're rebalancing. We're getting clean inversions. We're getting V-shaped recoveries, obvious draws. Everything's beautiful. Now, considering we're reacting off of a higher time frame fair value gap, such as this 5-minute, we have draws higher. We're bullish on the day, considering we swept data lows and we have a large imbalance above that we're going to want to rebalance despite bouncing off this 1 hour. Another possible long you could have taken off of this 5-minute would be this 30-second long. You take this long, stop loss relatively around here, break-even point at this internal high right there, and then for a take profit, You could have just went to the 5-minute chart and taken it off of possibly maybe this 5-minute, no, not that 5-minute fair value gap. We had relative equal highs above. You know you have a draw higher. As long as you get 1R, you can just hold this for 1R, whatever you so choose. 1R would be below the break even. You could literally take it like that to this internal high. You could leave it higher. I know we had midnight key open, which some people trade to. I personally don't. A lot of people wanted to see midnight key open get traded to. Either way, despite where you want to set your take profit, you can be very discretional with that. Get a long, set your stop loss as a closure below the inversion, long towards this internal high or break even at the internal high. You will see. I didn't personally take this, but we clearly pumped higher off of this draw, reacted off the 5-minute. We wanted to trade higher. Okay. Now let's see here. We're sweeping highs inside of fair value gaps. We're wicking above this 1 hour, but if we're going to reject this 1 hour, we still could get a possible play off of this. We're 4 trades in. I'm done for the day. My brain is melting, but I'm just hanging out calling out possible setups. And there was one more setup which fit the model. Obviously, I'm not taking anything. I'm so done for the day. We hit every draw. But just to show you another possible trade that presented itself within the model was after sweeping this hourly high, we formed a 2-minute fair value gap to the downside here. Once again, reaction off a higher time frame fair value gap. If you were bearish on the day, I was not. I was not bearish. We had a 5-minute fair value gap protecting lower. But if you were bearish and you wanted to see us trade back to these lows, you thought we were going to get a bearish trade on the day, you could have possibly looked for a 2-minute inversion off of this hourly fair value gap. Some people wanted to take this. I personally didn't because I was done for the day and I thought we met all of our daily objectives. But for a 5th and final possible trade, you could have taken a 2-minute inversion off of this towards this low or whatever. And then obviously, you know, my model, there's a couple ways you could play this. You could go break even at this internal low, however it may be, however you want to do it. You'll see if I let this play out. We trade lower, we get a reaction. We're inside the 5-minute. You should have been break even if we traded into the 5-minute no matter what, just because that's how the rules are within the setup. But I don't know how you'd want to play this. This just was another possible valid inversion that fit the model today. Those were all 5 possible trades. The last one was kind of meh. First one, this one was my favorite. Continuation was also super good. Those were the 2 that I was looking to take personally, which I did take. This continuation inversion, those were the ones I took on my live account. I made like $500 or $600 on those. I think it was, yeah, $525. That's what I made on my 5 Pathway to Payout series accounts for that. But let me slow down. I'm not done here. I'm not done yet. We got a lot of great opportunity today. The model presented a lot of valid setups. We had great price action, rebalancing, continuing. This was hard for a lot of people to trade because everything was happening so fast. But one thing I want you to take away from this is just because you're getting valid entries doesn't mean you should be taking all of them. You should be asking yourself which steps within the model are being met in order to form the most valid setup possible. If you don't know what steps are in my model, click the link to claim the free PDF in the description to learn my model or join the free Discord. But anyways, some of these were better than others. You see some of them had a lot of problems. Some of them only had one problem. Either way, they still all were valid setups. You just have to use your own discretion and your own edge on top of having a deep understanding of liquidity and confluences to know which possible trades will be the most high probability. And then you're personally going to fade some, take others, however that may be, that you build your own edge and you learn that. But I can't stress this enough. You should not be taking all of these trades. You should have a daily bias. Whether you're bearish or bullish is going to rule out half the trades that present itself. Whether you want to take a continuation for more confirmation or you want to try to catch the bottom of the move, that's how you rule out some more possible setups. So I just want you to take away from this, not every entry you have to take, and you have to understand a lot of entries within my model will work, but you have to ask yourself which ones are going to be the best, which is going to give me the highest win rate because I trust them the most. Which trades can I trust the most? Which signs can I look for within a position to build the most trust within that trade? And that's what you have to ask yourself. I showed you what I trust in most, but guess what? A lot of members within my server didn't like those. They took different entries in the total opposite direction that I was looking to trade, still based off of my model. Exact same model, just different ideas, different confluences, different narratives, and their own edge, which they applied differently. And it worked most of the time. There was only one trade that lost or break even today. We had 4 winning setups. 2 longs and 2 shorts, I believe. Yeah, a short, a long, a short, a long. Like, come on. Have your own edge. Understand liquidity. Know what's going to be the highest probability for your own bias that day. That's why I stress daily bias so much. Because if you have a clear daily bias and you know you're only bearish, you're only bullish, you just ruled out half those setups. Why'd you take a short if you want a long? Why'd you take a long if you want to take a short? That's what I want to get at. So study the model, study the steps, and always set in stone for yourself. How many steps within the model, how many confluences do I need to enter a trade? What's going to give me the most high probability setup for myself? If you see that amount of confluences being met, and you see a lot of them lining up in that direction, That's a trade you take. You don't take something because you see a valid IFEG and a liquidity sweep. That's not enough. You need to have conviction. You need to have your own edge. And once you see days like this playing out and you see what's working for you and what's not working for you, and you learn and you study through backtesting, that's when you go from a 60% win rate to an 80% win rate, and you have conviction in your trades because you know what works for you and what works while fitting the model, despite it presenting itself at many different opportunities throughout one singular session. I feel a lot of you should have been green on the day, despite if you did it the proper way or the improper way. But nonetheless, you need to be building your own edge, and that's what you get through backtesting. So take something away from this. Go backtest. Go study the confluences. Learn the model, but learn it for yourself. Don't take it just because it presents itself and you're a pattern trader. You're more than that. You can do better than that. I know that. That's all I have for today's recap. Go backtest today's price action and see what you like or don't like. That's all I got for today, and I will catch you all in the next recap.